At the recording of this video, the stock market is down. It's looking red. And this really emphasizes the reason why a lot of people get scared of the market. You're scared of losing money. You're scared of the value of your portfolio going down. When in reality, it's providing an opportunity to buy at a lower price. And if you're looking for discounts, then that's what I try to do. That's how I think about it anyway. Now, what I want to share with you really is something that I believe not spending time on can cost us a lot of money. And I cannot overemphasize why it is important. This is really for our future and for the future of the people that are coming after us, whether it's your kids, grandkids, whatever that may be for you. Here in this article, and I'm kind of blocking your view here if I move myself out of it. It says nearly half of American adults regret making this investing mistake. This was published in December 23, 2022. So about 2 years ago. And one thing they found, a couple of things, but what they found is that 45%, about 45.1% of Americans overall, including both investors and non-investors, said they regretted not taking full advantage of the stock market. And what does it mean to take full advantage of stock market? Because you can be investing, but you can be sometimes not taking full advantage of it. So if we think about taking full advantage of the stock market, what we are talking about is, one, let's think about how we can save for the future, the retirement stage, whatever that may look like, for you. What is your plan for retirement, like at the stage where you can no longer work? That's what we mean. Now, remember, you can choose to retire when you're 40, you can choose to retire when you're 50, you can choose to retire when you're 65 or 70, or you can choose to not retire at all. I mean, someone like Warren Buffett isn't retiring, is not planning to retire. But there's always a stage where you won't be able to work anymore. And what does that look like for you? And what are you doing towards that stage? Because my goal isn't necessarily to retire. Yes, I may choose to stop doing something actively and do it passively, but I'm not looking to that stage where I'm not doing anything. So that's me. But also we have to remember that your body, at a certain stage, you won't be able to do the things that you can do. And when that stage comes, or when that time comes, what would you do? How would you support yourself? So that is where retirement comes in. Now you can choose to invest through your retirement accounts, that's where you have things like your 401k, your SEP IRA, and so many IRA accounts that you can use, Roth IRA, right? The list goes on. Depending on where you find yourself, if you have an employer and they have like a 401k style contribution that you can open up, then of course take advantage of it. And they always say that at least you match whatever the maximum that your employer can contribute or match anyway. So you want to not leave any money on the table. So if your employer is matching 3%, 5%, then at least be doing that 5% so that you're getting the maximum amount of money that is entitled to you. Now, the second thing that you want to think about is, once your retirement is taken care of and you're doing that on a consistent basis, look to maximize that retirement. The reason why you can do this is because you are able to save yourself on taxes or the tax benefits that comes with it. So if you do a Roth 401k, for example, you want to be contributing the most you can contribute, and that means that you're going to be taxed today, and then in the future, when you retire, whatever that stage is for you, you can choose to take that money without getting taxed at all. On the other hand, you can choose to do a traditional 401k where you are saving a lot of money right now. You are not taxed on that money, but in the future, you will have to pay the taxes. So if you think that you will be in a lower tax bracket in that future, then sure, you may want to do that, whatever that stage is for you, whether it's 65 and above. And you have to remember there's some age requirements which we're not going to get into, where you have to start taking your distributions and you have to start withdrawing your money if you put it in that way. And the point here is, if you think you'll be in a lower tax bracket, then maybe that's what you do. Now, once you've maximized as much as you can in your retirement account, okay, in things like the traditional 401ks, traditional 401k or the traditional Roth account, 401k Roth accounts, then you can move to things like saving for the future of buying things. For example, you want to buy a house, you want to buy a car, you want to go to school in the future, you want to save for the education of your children, you want to invest maybe in other type of assets, maybe it's real estate, and you want to start saving. Now, what do? Do you save that money in a savings account, or do you invest it? Because remember, if you can choose to invest right, not at the right time, but if you just choose to invest on a constant basis, you're likely going to do well. And here's why that is important. Because if you choose not to do it, the price is steep. All right, there's a price for it. Now, if you look here, it says, why do individuals not participate in the stock market? And I think this is important. And they found out, okay, we're going to get into to answer that question that I asked you earlier, or to show to you why you want to start saving for that future asset investment. There's a reason, okay? But here's something we need to understand. It says, in particular, inertia, or in this case, financial literacy, as suggested by Van Ruge, and it goes on to say, are related to the refusal of individuals to invest in the stock market. So financial literacy, all right, inertia, the reluctance to move or to do something, to take action, okay? And it goes on to say, a large number of investors spontaneously mention lack of interest in investing in the stock market. Now, if you are looking to make money, you cannot say that lack of interest will be the reason why you are not going to invest in the stock market. No, you can't do that. A large amount of money is left on the table in this process. Okay? A large amount of money is left on the table. And here's an example of what I mean. If you have invested, let's say, $10,000 in the stock market in 2015, okay, you would have about $32,000 today. And it says that's a return on investment of 221%, or about 13% per year. And mind you, this is including the COVID pandemic. All right, this is including the downturn that we experienced during that time. So if you are not taking the full advantage, if you're not investing, if you're scared, then these are the numbers that you want to be looking at. Okay, these are the numbers you want to be looking at. Another one is, if you had invested since 2005, okay, same amount, say $10,000, you would have $67,558 right now. $67,558 today. Well, at the recording of this video, which is around 10% per year, a return of 575%. So this is not a reason for you to kind of feel like, oh, you've lost out, or you've missed out on the boat, or no, because the stock market keeps getting bigger. If you look at the biggest companies in the world, Apple, Meta, Nvidia, all these big companies, right? These guys, they keep getting bigger. Why? Because they keep acquiring bigger companies or more companies. The assets keeps growing. People keep investing into them, and they keep getting. And that's just the stock market as it is. A lot of people are taking advantage of the stock market. Now, you don't want to be left out of this. This is an opportunity for you to grow your money. This is an opportunity for you to let your money work for you, so that you don't have to keep working long term. Now, this is important. Do you have to start with a lot of money? I think a lot of people often think that you have to have a lot of money to start investing. No, you don't have to. You can literally start with $10, $15, $20. By the way, there's a link below that you can use in the description of this video that you can use on Robinhood. But you don't have to use Robinhood. You can use any broker or you can use any brokerage firm out there, whether it's Robinhood, Romumu, M1 Finance, Charles Schwab, Merrill Lynch, the list goes on, right? I don't have to keep going through that, but find something that you're comfortable with and stick to it, okay? And make sure it's something that you understand and stick to it. Now, you don't have to start with, like I said, you don't have to start with $1,000, all right? But this is $1,000. If you invested $1,000 over 10 years with a return of around 8%, you would have $1,158, and that is you not making any additional contributions to that. As you can see, I did no additional contributions in this calculation. Same thing with $10,000 over 10 years, 8%, no additional contribution. You would have 21,000. I think I said that incorrectly, by the way. Let me go back. So you would have if you invested $1,000, you would have 2158. All right, with the total interest gained 1158. All right, if it's $10,000, you have 21,589. All right, 21,589 with a total interest of 11,000. And this is you not contributing an extra. This is you not contributing any extra to it. Okay, you're not contributing any extra and not making any additional payments. And I think it's important to mention, what if you started with $100,000? Because remember, your retirement account can grow to that stage, and you're in your 20s or early 30s or early 40s. If it grows, and let's say this is $100,000 that you already have saved, and you continue to let it do its thing without touching it, without borrowing from it, just let it work, let it sit in there, you would have $215,892. Now, is this enough for you to retire? No, but the concept here is this is only for 10 years. This is only after 10 years. So if you have a lot of time on your side and you can let it ride it out for another 20 years, all right, a total of say 30 years, you would have a lot of more money, and you're making contributions every single month if possible. Okay, every single month you will do a lot better. All right, now my desire for you is that you take this video, you watch it, and you take action, because there's nothing that will stop you other than yourself. Not me, it's just you. Now, you may say, yes, you don't have enough money, or you're not working yet, or you're waiting for something. And I get that, because especially as immigrants, well, I'm guessing most people subscribe to this channel or are subscribed to this channel are immigrants. But I want you to understand that your ability to change your life really starts with you taking action. So do what you have to do, but start investing. Even if it is $100 you start with, just get into it and slowly let it work for you.